Welcome again. Hello everyone. This 7th of June 2022. We'll start here as we did last weekly outlook. It's Tuesday today, a bit late with my upload. But look, it's only been one day in the trading market in the US, so not much has happened so far. So we'll start here on gold. Last week we had a down, up, up, down sequence. Pretty much, if you look at the weekly, was a doji. Pretty much sideways. Still respecting this 1869.96. You can see all the bodies of the candles have closed still beneath that level. Yes, we have some wick up here, which means it rejected, wiped out stops and came back down and closed around these levels here. You can see the bodies. Anyway, you can see we opened yesterday, continued this bearish move down for the day, and now we're having a pullback. So if you look the intraday time frames, you'll see what's happening here on a 1 hour chart. Had this down move, where are we, 6th, continued down, moved sideways now, and we're having a pullback, I suspect, because the overall bias is currently bearish. Lower highs, lower lows. So moving on, silver. Actually, let's just go back and explain a bit further. So area 1 I'm looking at is 1835 to 30 region, to break through that floor, then continue to 1806 and through all these levels, and then down as low as 1715 over the next weeks, month or two. So silver, similar, down, finished the week, and now it's probably similar, a doji. Where are we? Yeah, body's a bit lower, whereas the gold, the open and close were very close together, pretty much exactly close where it opened. Silver had a bit of a push yesterday, but it's been rejected. You can see in the wick there. Now we're coming back to test it. Probably a pullback like gold. Yeah, probably up into here, maybe a bit higher, then continue. Short, area 1, 21.41 I'm looking at. Second level, 21.200. Break through those, then this previous most recent low, 13th of May, on to $19 in the coming week or two, maybe a month. Depends how quickly it moves. It could consolidate and form more of this pullback and then continue, but long-term target, I guess you could say, not in a day or two. So moving on, oil, bullish push, respecting this 0.786 retracement, probably just consolidating a bit. I suspect it will go back to the 130, as we touched on last update, 147 and above, 150s. Who knows, could be there by the end of the year. UK oil, much the same, similar story. Level 1, level 2, breaks those two. It's making new all-time highs. And obviously the price of fuel is connected to oil per barrel. You can see we've had this large move pretty much since the beginning of the year. The Ukraine, that was February, March, so it was already on its way. It pulled back here, and then it was continuing. So, the charts will always tell you ahead of what the news will say. So, to be able to understand and interpret what these candles are telling you, you can, I guess, be a step or two ahead. with how you manage your investments. So dollar, this is the DXY, which is made up of a basket of currencies, mainly the euro, yen, I think Swiss franc and some others. So similar, made this high, came down. Will we have another test of this high, 105, or will we make a newer high before we start a new trend for the next? Because it's very bullish. It does need a pullback, and I think people who are short here, smart money drives the price back up. People who are positioned here short, maybe even as low as here, wipe them out, get the liquidity, and then push lower again. Yields. So last week, looks similar story. First day of the trading week, and we've just continued bullish. So our next target's 3.2, and then could make another high before we pull back, and we'll go from there. Now the dollar, still watching these levels for a possible continue and then reject and drop down, because overall it's bearish, so we'll get a continuation to the downside. You can see it's still respecting 33272 on the Dow. Yesterday it also closed bearish, so will we see a continuation? Level 1 I'm watching, 32509, break through that. Second, 31968, and then my last level, 30635.76. Break that, we're going below 30,000, I would say, to retest. Monthly Fibonacci, you can see 0.382, 0.5, 0.618. So this would be the first zone I'm looking for. Then as low as here, if not even here. Like with technical analysis, you go one step at a time. I'm not predicting here yet because I don't trade that way or invest that way. So I'm looking weeks to months. Currently, we made this bottom here. We've come up. We've wiped out this previous high. Possible A, B, C. Pull back, wave 2 or 4, and we'll continue. S&P, similar story, still hasn't broken up above this 4186 level, moving sideways, closed bearish yesterday. Level 1, level 2, level 3, or rejection or retracement areas I was watching since this pullback here started. Now for the downside, level 1, level 2, level 3, and level 4 being the last at 3810.32. Break of that, will we see 3500, which is a 0.5 retracement, can go lower, similar to the Dow. Nasdaq, similar, came up into this 12,847 to 12,914 zone I was watching for a retracement, and look, I'll just show you how I get to these levels. If you look at that, that's 0.618, and that's 0.786, and then there's some gap areas there. So based on that I position my levels. So the Russell, similar, came up into this rejection zone, perfectly tapped that, like that's beautiful, 1903.5, and closed bearish, little doji again. Will we see continue the downside, level 1, level 2, level 3, break of that, 1536. Which, if you look similar to the others, 0.618 retracement. Now a quick look at the futures. This trades 24.5, whereas the S&P is only open New York session. And here in Australia, that's 11:30 p.m. till 6 a.m. So you can see much the same as the S&P cash index. Came up, rejected this 4187, wicked up there, bodies have all closed below, wicked up again, closed down again, and we're continuing to the downside today on 7th of June 2022. So level 1, break of that, level 2, level 3, 3807.5, and a break of that, will we see, I don't have it marked out on this chart, but if we go back to the cash index and look at the similar retracement, so that was 0.5 retracement on a monthly, so for the futures we'd be looking at similar 3,500 in the coming week or two, depends. And you know, this will be wave 3 of 3 of the start of this overall bearish trend since basically the beginning of the year. As you can see, that was the very high. We failed to make a higher high ever since. So at that point, here you see this movement down after all these small little candles moving sideways. It's slowing. The up move is slowing there. 1, 2, 3, 4, 5, 6, and then on the 7th, bang, to the downside. Move sideways again, a big wick, come back up. Let's just move down progressively with pullbacks. So, you know, the news says this. People might say, yes, it's still bullish because it hasn't pulled back 20% and we're not in a crash. Well, yes, we haven't crashed. This is what you call a bearish trend, which is a gradual process. A crash was back here in February and March of 2020 when the illness struck. So you can see, if we go to the monthly, doji here, wicked up, big body to the downside, wicked up again, big body again, wick lower, and then 2 months it's over, bang. That's a crash. It's short, it's fast, it's a significant move to the downside. You know, 36% almost. And you know, the technical term for a bear market is a drop bigger than 20%. So yes, that happened. However, this is where those little, I guess, ins and outs and discrepancies will decide. You know, that's a technical definition, but when you are a chartist, when you're a technical analyst, and you can look at a trend simply by looking at price action, these candles, no noise, no people's opinions, no people interpreting it, and then understanding it how they do, and then portraying it, and then your mind bringing it in, using your perceptions, and then understanding it. This cuts that straight out. You learn it, and technical analysis is like maths. You have to understand the rules. Once you do, it works very, very well. So you can see bearish trend, high here, high low, see, low, high low, high low, high low, high low, all-time high, had this movement, big bearish candle, at that point broke this previous low. So at that point you're looking, okay, this has changed. This has changed now because we haven't made a higher low. This is a previous low. If it was a higher low, it would reject around here, continue up, make a higher high, continue the bullish trend. If you measure this very move over 100%, 115%, from the open to the close in 651 days, so 2 years, and that's just the S&P. Like, that is a big movement, 115% in 2 years. So, there's a lot of greed. This market is still very bullish, even though what people may say. Apparently surveys are done in the US have people reporting that yes, they are bearish, but they still have majority of their investments still in the in stocks, indexes, what have you. So there's a discrepancy between what they say and what they're doing, and at the end of the day, that's what people do that matters. Words are just words. To protect you, your family, you need to be positioned accordingly. And currently we're still bearish, so if you are in a position where you've made significant gains, take profit. Turn it into real cash, invest it, maybe in, to be honest, I'm just keeping cash at the moment, this current climate, and I've taken some shorts. So what that means is I've made money when the market moves down. Made significant profits all through here in May, and then been waiting for this movement. I've got another short open, and it's looking like we're going to break this level tonight. Wave 3 of 3 is the most and the strongest level in Elliott wave principle, so once this gets going, it will move, and it can move fast, and it's going to be interesting. If we also have a look at bonds, because bonds is the big dog, that's debt. Basically, you buy government debt and you get a return on that investment, and right now they're offering higher yields because bonds have been selling off. Basically, as bonds sell off, the yield goes up higher to attract investors to buy bonds. So the stock market sort of follows bonds. If bond market is up, usually that means, if yields are up rather, usually that means that money is leaving the debt market and entering the stock market, and vice versa. When yields are down, money's no, other way, yeah, that's right, other way around. Oh, sorry about that, guys, I don't know what I'm saying, but you get the drift. So yields, next level I'm watching, we've already been through this, but interesting. There's a long bond, similar, came up here, moved sideways, pulled back down, we get this final leg lower, 130.01, before seeing a rush into bonds as the market drops, because people are looking for safety. So if we have this wave 3 of 3, we've got wave 4, wave 5. So the stock market could be dropping gradually between now and the end of the year, next year, before we finish wave 5. And if this is in the final wave 5 here, will we see a pullback in bonds, meaning money's entering bonds for safety, as I said, because basically the return on bonds is still 3, 4, 5% compared with the stock market, which may, currently the Nasdaq this year has already lost 30%. If you're still holding, you're up, well, still down 24 and a bit percent now after this movement. So that's pretty significant move. I think further downside is needed, and then bit by bit want to just go through some of these charts today as well. So Reserve Bank of Australia, see the economy, just look here, major trading partners, pretty much tracking all together. China and India. Some countries go down when others are up or plateau. It's money changing hands, I guess. Inflation, yeah, massive inflation at the moment. Because back in March of 2020, all the central banks printed or created lots and lots of money, bought lots and lots of bonds, and just credit issued through everyone's eyeballs. Credit creates, a bubble basically, and we've had interest rates low since 2008. And it's unsustainable. It's 2022 now. It's 16 years. And I always like looking at charts. If you look 16 years, like, gosh, look at that. That's the Nasdaq. Put on a log chart. That's the bottom back after the '08 recession. Look at that movement. Almost 1400%. 1400%. That is massive. And people think, oh no, it can't move down, or like it's silly now. It's just gone silly. Don't be greedy, people. Take your profits. Enjoy life. Use it to. Don't just want more, more, more. It's either 2,000, 2,500. Gosh. And then we know what happened then. 81% drop. If we look at that comparatively, 81% drop. We're going back below that all-time high back here in 2000. And we could get back to this previous high. You just don't know. The way things are, the amount of debt and credit in the world, the world market needs a healthy correction, or a bear market basically, to reset. And the World Economic Forum has been talking about that in other ways. Obviously they wouldn't say they're going to crash the markets, but if you look at the bond market, the stock market, the housing market, interest rates being at all-time lows, people stressing out because they've raised them 0.5%. Like, look at this. House prices. Look at that. That's parabolic. Household debt matches it. That's credit. That's prices. So, more credit creates more people buying, and it's not sustainable. Australia's household debt is 200%, so for every dollar they owe $2. Like, that's crazy too, to be in that much debt in order to invest and buy a house. In my opinion, like, why? There's many other things you can invest in. Find the right people, find the right books. Even there's a lot of stuff free online. It always pays to seek out information rather than just relying on what the news and other all media types are telling us. You've got to be informed. We know oil and gas. It's off the charts. People are struggling to pay for fuel, especially if they drive a long way. Spoke to some people at work today. They're saying they're avoiding travelling to work because one of them lives in over an hour away, and another probably half an hour to 40 minutes because of the price of fuel. I'm fortunate that I live very close to my work, 3 k's, so it's no issue, and I'm reimbursed for it. Very interesting. Look at this, assets, liabilities. Look at the cash rate, see? Look at it ever since 2008. That's what we looked at in the stock market. Crazy. Over 1,000% returns. So you have very, very low rates, so people are taking out credit and loans, investing. Don't take profits. It's going to keep going up. It's going to keep going up. And then one day, oh, maybe I should have taken profits. Never be too greedy. Most of the world's been tracking the same. 2025 to 2030, it's starting now. We could easily be entering, yes, we're in inflation now, but we could be entering deflation. So, be prepared. Look at this 10-year Australian government bond yield. Will that rise? Bang. And once the bond market collapses, a lot of things will go down with it. Through to even currencies. 10-year government bond yields. This is other countries. Look, they're all rising. China, they've already had their moves previous. Australian and US differential. Very similar, really. New loans, like fixed rate loans, on the up because people want fixed rates. These are down. How expected is that? Just browsing through a bit further. It's currencies. So yeah. And a couple of things I may say is, through all news and everything you hear and people you talk to, and if you position correctly, you won't stress. You have to be positioned correctly. And if we look at two terms here, you have to be measured, which is calculated and deliberate. And when you're informed, you can be calculated and deliberate because you know what's going to happen, you know what to look for, and you know what to do, more importantly, and you have to act. And the other word I'd mention is you have to be poised. Being in balance or equilibrium. So, with technical analysis, if the trend here comes down, makes a higher low, shoots high, breaks this high, continues, I'm bullish. And I'm invested accordingly. Because you sit in cash, you can then pivot, go long. Close positions, pivot, go short. You're mobile, you're nimble. And then you can remain measured and poised. So a couple more things we'll touch on. This is the US, look at this. M2, look at since 08. Like, this has just gone silly. That's silly, and you wonder why there's inflation. Oh dear. So, oh shoot, there's an illness to create all this money and stimulus. Wonder why there's inflation now. There's a lag. It's injected in the economy. It takes 3 to 6 months. If you've ever listened to a guy by the name of Dr. Lacey Hunt, very good economist. But it's unsustainable. So As I've said, position yourselves correctly, be nimble, be poised, be calm, adapt, and yeah, that was enjoyable. Till next time, take care. Thanks.